The government is known for its money spending, its money borrowing, and its money printing. But for Americans, one of the biggest expense that we have is taxes. And that might have you wondering, if the United States government can print and spend whatever amount of money that they want, why do we have to keep paying taxes? Psst. They can print our tax revenue faster than we can pay it. Take a look. In 2022, the United States government collected about $4.9 trillion in tax revenue. You can compare these taxes collected with the amount of money that the government printed during the COVID era, which was somewhere between $5 to $7 trillion, depending on who you ask. Now, it doesn't take a math genius to understand that this number is bigger than this number, which means that, wait, if the government is printing or has printed more money than what they generated in taxes, can't they just print this money so we don't have to pay this money in taxes so Americans can have more money to pay their bills, invest in themselves, pay down debt, and save? Well, it's not so simple. To really understand this, there are 4 things that you have to understand. Number 1, who is actually doing the money printing? Number 2, this idea of power and control through taxes. Number 3 is the idea of taxes being collateral. And number 4, the impact of printing so much money. I'm going to go over each of these 4 items in this video. And if you stick with me until the end of this video, I'm also going to show you how you can get a copy of this ebook, How to Build Wealth as an Investor, that my team at Briefs Media wrote for free. All you gotta do is stick with me until the end of the video. So let's start by understanding who does this money printing in the first place, because we have the government here made up of a lot of different departments, one of which is the Treasury Department. And within the Treasury Department, you have the IRS. Now, the IRS is the agency that's in charge of collecting taxes. When you send your taxes, you're sending it to the IRS, which is a part of the Treasury Department, which is part of the government. So the IRS is in charge of collecting taxes. Then the Treasury Department comes up with ideas on how to get more money and how to spend their money. Now, they are influenced by other departments in the government about how to spend their money, but the Treasury Department is the money control center of the United States government. However, what we've been seeing happen year after year after year is that the government keeps spending more money than what they generate through taxes. Meaning the IRS is collecting money, but the Treasury Department is spending more money than what the IRS is generating. So where does the government actually get this money from? Where does this money printing happen? Because the money printing actually doesn't happen here in the government. It happens over here with the Federal Reserve Bank. This is known as the central bank in the United States. And while they're called the Federal Reserve Bank, they're actually not federal. They're not a part of the United States government. They're supposed to be an independent entity. It even says so on their website. If you don't believe me, they're not a reserve because they don't keep any cash reserves anywhere. And they're not a bank because you and I can't go there to deposit money. However, what the Federal Reserve Bank can do is they have influence over our monetary system, meaning they have the ability to essentially print money and control interest rates. So now, when the government, through the help of the Treasury and the IRS, wants to spend more money than what they're generating, they have to go and get this money from somewhere. They're going to have to go out and borrow this debt. Now, the place where the government can get this debt is either by borrowing money from people like you and me, is by borrowing money from people like you and me when you and I go to buy things like treasury bonds, treasury bills. That means we are lending money to the United States government. But if the government is issuing too much debt, meaning they need too much money, then they can go to their friends at the Federal Reserve Bank and say, hey, Fed, can you lend money to the United States government by buying this debt? AKA lending money to the United States government. So it's the Federal Reserve Bank that's now going out and buying these treasuries, aka lending money to the United States government. Now, if you remember what I said just a second ago, the Federal Reserve Bank doesn't have any reserves. They don't have piles of cash just laying around that they can give to the United States government. They have the ability to create this money. So now, when the government wants to go out and issue debt, and the Federal Reserve Bank is buying that debt, that means the Federal Reserve Bank has to then essentially print this money and lend it to the United States government. So the entity that's printing the money is not the government, it's the central bank, the Federal Reserve Bank. They create this money essentially out of thin air, and then they lend it to the government, who then has the ability with the Treasury Department to go out and spend this money in addition to the tax dollars that they generated from here. This brings us back to the original question of, well, why do we need the IRS in the first place if the government can just borrow more money from the Federal Reserve Bank, because they're clearly already borrowing trillions and trillions of dollars from the Federal Reserve Bank? So why do we need this IRS entity to collect taxes from American people and businesses and investors? Well, this brings us to point number 2, which is understanding power and control. Because if the government now imposes a tax on people, that creates more power for the United States dollar. Because remember, everything that's happening here is based off of the United States dollar. And one of the ways that the government can create more value out of the United States dollar is by making sure that all transactions are happening through the United States dollar. Because when you go and you pay taxes, you're not paying taxes in gold. You're not paying taxes in pesos. You're not paying taxes in rupees. You're paying taxes in United States dollars. So this is a way to incentivize people to work for dollars and pay taxes in dollars, which creates more value around the United States dollar, which is the world's reserve currency at this time. And it also creates power over people because the government has the ability to encourage and discourage certain things through taxes. Like if the government says, we don't like when people smoke, they can impose taxes on cigarettes to make it less attractive for people to smoke. And so now the government can impose things and discourage things by imposing taxes. So it's a way to kind of keep power and control over people and its currency. Third is what I would like to call collateral. Now think of it this way. If you wanted to go out and get a credit card, how do you get approved for a credit card? Well, they're going to ask you, how much money do you make and what liabilities do you have? The more money you make, the more revenue you have, the bigger the line of credit that you're going to get. And so now the credit card company is looking at your income kind of like collateral, because if you're making a lot of money, then you should have the ability to pay back a bigger line of credit or credit card, because now if you spend more money, well, you have more money to pay off this credit card. It kind of works the same way here, because now the government is working to generate their revenue, if you want to call it generating revenue, but they're generating their taxes here through the IRS, meaning Americans, American businesses, American people, American investors are going to work to generate revenue. Now, as you work to get paid, some of this money is going directly to the IRS, which is a part of the Treasury, which is a part of the government, which means now the government can show we have XYZ income. We made $4.9 trillion worth of revenue in 2022. Now, again, just like with a credit card, the more income that you can show, the more credit that you can qualify for. So now, if the government is showing more income, they're showing bigger tax revenues, they will have the ability to go out and borrow more debt. Now, you might say, well, won't the Federal Reserve Bank always just fund whatever the government wants? Well, in theory, that's what we've seen happen. Remember, it's not federal. It's not supposed to be a part of the government. So there's supposed to be some level of independentness where the Federal Reserve Bank has to look at the balance sheet of the United States government. They have to look at the P&Ls, the profit and loss statements of the United States government, and then make a decision of whether or not the United States government is a worthwhile investment to keep sending their money into. Not to mention, the government also has other investors outside of the Federal Reserve Bank, like regular people, people like you, people like me, can lend money to the government, and other countries like China and Japan are lending money to the United States government. So all these entities that are lending money here in the form of debt to the government are going to look at what the government has in terms of collateral, aka tax dollars, aka the strength of the economy, because now when they make their lending decisions, they want to see, can the government continue to pay back their interest? Can they pay back this debt? That is the question that every investor, whether it's the Federal Reserve Bank, whether it's regular people, whether it's other countries, are asking. So this tax revenue that the government is collecting is that form of collateral. And then you have number 4, the impact of this money printing, the impact of this debt. And let me start with the more obvious impact of this by showing you a chart of the United States government's expenses. This is directly from the Treasury Department, showing the top 10 areas where the government spends their money. Those are the top 10 places where the United States government is spending their money. Again, they're getting their money from taxpayers through tax dollars and through this debt. But the more interesting part here is, which one do you think is the fastest growing expense for the United States government? And here's a hint. It's not Social Security and it's not national defense, even though you have a lot of wars going on in the world. It is the interest expense. It is the amount of money that the United States government is paying in interest on all of their debt. In fact, it is expected or forecasted that the interest payments that the government has to pay on this debt will exceed our entire military budget by 2028. So what does that mean? The government is collecting dollars from 2 different places. They're collecting dollars from taxpayers through tax dollars here, and then they're collecting dollars from debt here. And where's that money going? Well, it's going through those 10 expenses that I just talked about. But the fastest growing expense is this interest expense to pay back all this debt that they generated from here. This is not only the fastest growing expense, but this is going to be one of the largest expenses for the entire United States government in the coming years and decades. Now, part of the reason for that is because the government has been borrowing more and more dollars, and the second reason for that is because the interest rate on this debt is also rising. So it's a double whammy. You're borrowing more dollars, and then you're paying more money to borrow each one of these dollars. So you can start to see why this becomes an issue, because now as the government goes out to borrow more money, you have all these investors like the Federal Reserve Bank and investors like you and me and investors like other countries saying, well, will the government continue having the ability to pay back this debt? And if 10 years from now or 15 years from now or 20 years from now, the government starts to struggle because, well, they're not generating enough money from tax dollars, you can start to see where that would pose a bigger issue for the government, for the economy, for the dollar. And this is where now the government has to make a decision of, are they going to cut back on some of these expenses, which is painful because that means they might have to cut back on things like Social Security or healthcare or other welfare benefits or entitlements or maybe national defense. They might have to cut back on some of these things, which means people could lose incomes, people could lose jobs, businesses could make less money. But the alternative is they keep spending more and more money without generating more tax dollars and relying more on debt. Now, you know from a consumer perspective that if you just keep spending more money with money you don't have through your credit cards and you pay back one credit card with a second credit card, you can see the impacts of that. Well, how long can the government last? Well, only time will tell. And so this is the first impact of constantly spending money that the government doesn't have is, well, the costs of borrowing money keep going up. The fastest expense for the government is interest expenses. The second cost of spending money that the government doesn't have is what I like to call the hidden tax. Now, this tax is pretty obvious. When you go to work and you get paid, that tax is obvious. You gotta pay your employment taxes, your FICA taxes, you gotta pay your income taxes. That's obvious because that gets taken out of your paycheck. When you make profit in your business, you gotta pay taxes. That's obvious. When you make profit from your investments, you gotta pay taxes. That's obvious because you realize that this money is leaving your account and going to the government. But then you have the hidden tax, which comes from here, the money printing. Because if you just keep printing more and more money, if you create more units of dollars, what happens to each other individual unit of dollars? Like if you have $100 in your bank account and the Federal Reserve Bank keeps increasing the amount of dollars out there, what happens to the value of the $100? Well, what happens, what we've seen happen, is that the value of the $100 that you have goes lower and lower and lower. Just think about how $100 could have been spent 5 years ago versus today. $100 in a grocery store 5 years ago could buy you more than what $100 can today. And if you project back a few decades, $100 in the 1970s could buy you way more than what $100 can today. Why? Because the Federal Reserve Bank, over the last number of decades, has been working to increase the amount of units out there, increase the amount of dollars out there. Our currency, our dollars, are not backed by any precious metal like gold anymore. They were back before the early 1970s, but now it's not. So now, as you increase the amount of currency, you increase the amount of units out there, you increase the amount of dollars out there, the value of each individual dollar goes down, causing the price of things to go up. Now, the reason why the prices of things are going up isn't just because it's more valuable, but because the currency that you're using to buy that item, to buy that thing, is becoming less valuable. So you need more dollars to go out and buy that thing. So now who does that hurt? That hurts savers, because if you're just saving your money and your money's not growing, well, then it means your savings are staying here while the prices of things are rising. And if you're just relying on a salary that's not growing fast enough to keep up with the inflation, well, now you might be getting raises, but it's not keeping up with the more expensive groceries, the higher housing costs, the higher cost of living. And this is what we've been seeing happen in America, not just over the last few years since the pandemic, but since the early 1970s. And this is where financial education becomes so important, because the people that benefit are the people that own things. It's the people that own real assets. Because what has gone up in price? Well, the prices of things like real estate, the prices of things like assets, like stocks. And so now the asset owners are benefiting because the value of these assets are going up. Even if the value is not going up, the cost to buy these assets is going up because the value of the dollar has gone down. And this is where financial education, again, becomes so important, because the people that understand this get the benefit. And the people that don't understand this, which is the vast majority of the country, the vast majority of the world, they're the ones that are paying the price. And so now, once you understand this, the question is, well, what do you do? And this is where it becomes important for you to start spending some of your money to own some assets. That way you can benefit from the way that the economic system works. Because the reality is, this is what's happening. This is what has been happening. There are impacts to this, and this will continue to happen. So now, as this continue happening for the next 5 years, 10 years, 20 years, 50 years, well, you got to think, what's going to happen to the economy and your money, and you want to start protecting yourself, your family, and continue to build your wealth. That way you're not the person that's just making everybody else rich, but you have the ability to build your own wealth. And this is exactly what we talk about in this ebook, How to Build Wealth as an Investor. I told you in the beginning of this video that if you stick with me until the end, I'll show you how to get a copy of this ebook for free. Well, if you want to get a copy of this ebook, How to Build Wealth as an Investor, all you got to do is click the link down in the description below, or go to briefs.co/ebook. And in this ebook, we start with the basics of how do you build the mindset of an investor, to how do you save your first couple $1,000s and pay down your high interest debts, to then how do you start investing your money? What are the different ways that you can invest your money? How do you generate cash flow? What are the different assets that you can invest your money in? To then how do you spend your money smartly? To how do you earn more money strategically? To how do you protect your assets? There's a ton of value in this ebook. So if you want to get a copy of this ebook, all you got to do is click the link down in the description. It's completely free, and you can start learning about how to do that. But this is why, again, that financial education is so important, because most people never learn about how our economic system works. I didn't learn this in school. I went through a lot of schooling. I went through high school and college and law school, and never once did anyone teach me about investing or building wealth or economic system. But the reality is we're all working to earn dollars in this economic system. And if you want to maximize the impact of the work that you're doing and the dollars that you're generating, you have to understand what to do with your money. You have to understand how to spend your money. You have to understand how to invest your money. That way you can actually win in this financial system. And while you might be very good at earning an income, you have to know how to use that income to actually build real wealth, because your wealth is not built through your salary, it's built through your assets. If you want to get your finances in order, the first thing you need to do is not hire an expensive money coach or financial planner or financial advisor. The first thing you need to do is just track your money. Once you track your money, you want to make some adjustments to how you're spending your money. Once you make those adjustments, make sure you're implementing those adjustments, and then rinse and repeat. As you